Let's bring in OceanFirst Chairman and CEO Chris Marr. Chris, thanks so much for being here. So we looked at those, pretty sizable sell-offs in some regional banks over the last month or so that Dom just showed us. How much of that has to do with just the overall rate complex, and how much of it has to do with just a kind of worsening sentiment surrounding the sector?
Yeah, it's great to be with you, Leslie. So I think it's a couple of things going on here. The first is there's a little bit of uncertainty around regulation and capital levels. So in that uncertainty, it's very difficult to understand what the long-term profitability will be for a number of those institutions. I think it's primarily about that and about concerns or questions about the rate cycle. Higher for longer, how does that impact different banks? How is everybody positioned? So I think it's a bunch of things kind of wrapped together. On the positive side, though, I think the credit outlook has gotten better, as it looks like there's a bigger chance that the economy is going to hit maybe a soft landing, or certainly have less of a recession. I think we can all be a little bit more, you never want to be relaxed, but you can be a little bit more thoughtful about credit risk.
That's interesting that you think that the credit picture is looking better, because we had SLOOS last week, which was a Fed survey of bank officials who basically said they were tightening their lending standards. They're pulling back on credit in this current environment. They're actually worried. You're not doing that, it sounds like.
No, we're not. I think you have to have your credit standards in good times and bad. And if you kind of play the game of changing your standards when you think the economy is going to be rough, you're going to wind up in a lot of trouble. So we've always been a conservative lender. I think what you're seeing there in the SLOOS survey is that bankers always get more conservative until you get to the point where we have clarity around the recession. So it's people being incrementally a little bit more careful as you go in. I think as recession fears hopefully will ease in the coming quarters, you'll see that kind of return more to normal.
Is there a lag there? Because it does feel like the recession fears have kind of abated, at least in recent weeks.
Yeah, there is a lag. Everybody wants to make sure that their portfolios are performing the way they like. Our customers are doing great. So, we operate Baltimore to Boston. We have a big presence in the Jersey Shore. It's a seasonal market for us in New Jersey. So we're seeing our clients doing pretty well, although things have slowed. You can see a slowdown in a couple sectors. You can see it in transportation. You can see it in warehousing. You can see it in a few other areas as well.
Does that mean you think delinquencies top out here or sort of plateau?
Carl, it's a really hard question, because delinquencies are so low right now, and charge-offs are so low. They're wildly lower than anything you would have seen the last 20 years. So you're going to have to return to normal. One concern I have is that return to normal, slightly higher delinquencies, a little more charge-offs, is going to spook the market a little bit, because we're not used to seeing these numbers. I mean, when you see non-performing assets and delinquencies at the levels they're at now, credit has been pristine. So anything other than pristine is likely to get a bad reaction.
Right. But you're talking higher than 19 levels, or just sort of filling that gap?
No, you're right, Carl.
Yeah.
So going back to 19 would actually be a significant shift. So I think that's what I'm concerned about, that you could see headlines where people say, delinquencies double or non-performing assets increase, and that doesn't tell the whole story. You have to look at the absolute numbers.
Do you think consumer behavior really changes if and when excess savings goes to zero?
That's the big question, right? That excess savings is really running down. So the concern is that when they lose that savings, then you have the student loans returning to repayment this fall. Is the consumer going to start to show the delinquencies? We don't see it today. With some exceptions, you're starting to see some segments in auto pick up a little bit higher. You're seeing some borrowers and credit cards pick up a little bit higher, but still cyclically pretty low.